Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. Today, we are going to be talk about a different topic than normal. Almost every day, we talk about the public markets. We talk about, the S&P 500, the NASDAQ, stocks, bonds going up and down. Today, we're breaking away from that completely because that's not all we do. Excuse me, it's not all that we do. Most people I say, I talk to folks, it's like, hey, get your first million in the market, right? And that's what most people do through the 401k, IRAs, that sort of thing. But once you're at the $1 million level, you're now what's called an accredited investor. So again, you can either make it by having $1 million investable, or you can be a high earner, if you will, 200,000 or so if you're single, 300,000 if you're as a married couple. But if you qualify, you can go off into these alternative investments. So today we have 4 of them, which we're only going to kind of bounce off the top of each. So it's really an awareness type video. So if you hear anything and you want to learn more about it, then contact Mike or myself, depending on who kind of presented it to you, and we can give you the details, if you will. So there's no intent to give you all the details in this presentation, because we would be here all day. And with alternatives, there's like you ask for more, you like it and you think that might be right for me, you talk to your advisor, and then before you sign anything, we put you in touch with an expert that would, again, you'd spend about another half an hour with them, making sure you get all of your questions answered, because they are a big deal, and they are also illiquid, meaning you can't just change your mind and get your money back out. So that's what we have for you today. It's pretty exciting stuff, but it's kind of at the super varsity level, if you will. This is a financial education presentation, so you have to do your own due diligence for acting upon anything here in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. Let's talk with saving on taxes. So everybody wants to save on taxes, and honestly, I mean, just not judging, I'm saying that until you're making about 150K or more, you kind of get all the benefits of the tax code. That's not an exact number, but really it's when you kind of break through that, either with income or with wealth, where now your wealth, your rental houses, your portfolios are now kicking off capital gain. You can get into a tax problem later on. So this is when, if you're sitting there going, man, I am getting killed in taxes, this is for you. So it's called direct indexing, and it takes 250K in taxable money to work. So if you don't have that, listen in for when you do have that. But if you don't have that, then you don't qualify, and you can't do this strategy. But I just started doing this for a couple of my clients. It is brilliant. So just to describe it, is it basically, you buy an index with this $250,000, and it has to go off to a separately managed account. So it's sitting in your Schwab account, but it's also sitting there as a placeholder, because Vanguard is the one that I'm actually using to do this for folks. But Vanguard takes that 250K and they buy an index. Say it's the S&P 500, which contains 500 stocks. Yeah, I already got it right. So, and what happens is they let it go. You buy the index and you let it go for like 2 weeks, and a computer monitors this. And now those 500 stocks, even if the market's up a percent, there's going to be 20 or 30 of those stocks at least that are down. If it's down, it sells those positions, captures that loss, and buys something else that is statistically similar. It can't be exactly similar, so you can't sell Coke and buy Pepsi, because that would be a wash sale rule. But you can sell Coke and buy Procter & Gamble, because it is statistically the same in accordance with the S&P 500 index as Coke. It travels the same. So what you're doing is, when something goes down, you're going to replace it with something else that travels the same. So over the course of a year, there's what's called tracking error. So you're basically buying the S&P 500. So if it's up 20 or down 20, that's going to be the return. But out of that manipulation of different positions throughout the year, you're able to stack up losses. And at some point, everything is up, because markets move up over time. So they say after around 2 to 3 years, you can't really generate losses anymore, because pretty much everything's up at that point. But you're stacking up these losses. And the first time I heard this, honestly, I looked right at another advisor, David, and I went, this can't be legal. Well, I've heard the presentation like 6 times now. I believe I see exactly what they're doing. I've asked all the hard questions, and it is a genius move. And what you will see in here, not going to go into it, but if you want to learn more, Investopedia direct indexing, read this 5 times. If you get it before 5 times, call me and say, Steve, I'm way smarter than you. But read this 5 times and before you have like even a shot at the brain kind of understanding it. But the issue is, This was once for the wealthy people have done this for years. And you're like, how is this even possible? Right. Well, a lot of things, like when I first started the business, Blackstone came on and gave us access to private equity. I mean, there's a lot of things that used to be for the wealthy and institutional that you can do now. And this is one of them. So again, it's for tax loss harvesting. It is absolutely a no-brainer if you have $250K in cash sitting around that you can tie up. Again, the liquid you need for this to work, you need to tie it up for at least 3 years as part of the strategy. But what happens is these losses stack up, and when you go to file your taxes, if you have capital gains, you use the losses to offset them, or if you don't, they just stack up. And they say, so when would somebody use this if they don't have a lot of losses? And they said business owners or people that are still in these big mutual funds that give out those capital gain distributions that you need losses to offset the gains. Those would be reasons to start that now. You build up these losses, and again, the losses just carry over if you don't use them. So that's number one if you want to save on taxes. The next thing, if you want, I'm going to stop sharing, then reshare out. The second one to save on taxes is called an opportunity zone. If you think direct indexing is difficult to get your brain around, then try this one on for size. Here is the email I sent out. I'll show you that first, because really the sponsor, which is Keith Buchanan, does a good job of telling you what the advantages are and also telling you the lockup time. So this is for you to save money on capital gains. So say you sell a business or you sell a rental property, and now you have 250,000, which is also the min for this, 250,000 in capital gains. And you don't want to pay taxes on it because you're like, no, I don't want to do that. Well, if it's real estate, you have 1031 exchange options. We aren't going to talk about that today. But if you sell the real estate instead of exchanging it, and you get that gain, you can take up to all of the gain and put it into an opportunity zone. Roughly in an opportunity zone, the taxes are deferred for 3 years. Then you do a one-time tax payment, and then the taxes, it grows tax-free from there. And you're really pulling in an after-tax, 15% a year. And you have to hold it in. This one is particularly, you have to hold it for 10 years. So you're like, wow. So you put, and they say, it's a 3.2 equity multiple, or what's called MOIC, multiple of invested capital. So $1 million in is 3.2 million. That makes it easy for the math. If you put 250K in, the minimum, then you're looking at something around 800 or so K. So you are making quite a bit, and you're deferring taxes. Again, this is something that we're about to have our building at the end of the month. If you're local, this is something where you would want to sit down with us at the table with Keith and answer all your questions on exactly how this works. But when you talk about, what's different from the folks, we have 6 clients that are in opportunity zones right now, but they're an opportunity zone fund with Cantor Fitzgerald. And the difference between this project is it's actually the physical project here in Austin. It's called Springdale or Shady Lane Apartments. I always think it's funny. I told Keith, I'm like, you need to not name things shady when you do financial stuff where you're looking for investors. It's like, come on, man, set us up for success here. But this is literally something you can go see, like drive by it and go, how's my investment going? I'm going to blow through all of this because it's a lot. But when you get down to the end, when I'm looking for it, I won't be able to find it. But yeah, you can see there's obviously a lot of things that you are looking for here. Oh, here's the investment slide that I want to say. So say you sell a property and you have $1 million in capital gains. This kind of tells you what it looks like if you go into an opportunity zone, that a total 10-year after-tax gain, you get that $2 million, where if you pay your taxes right away and then invest after taxes, normally you'll have 1.3 million. So literally this is a no-brainer. Like I said, we have 6 clients in it. The minimum on this is 250,000, so it's a fairly adult, if you will. But it's something that where if you like real estate, and you're like, okay, the market, I don't understand that as much, but I like it. I can understand apartments. Then yeah, that would be something that you can ask about. All right, the last thing is if you want to do some venture capital work, we have a company that we work with that a couple of us are invested with, including myself, called Advisor Stack, which should be shared out right now. This is their, get over here to the right. So Mike's our CIO. I'm the CEO. Big firms will have a chief technology officer that makes everything work. And we outsource that. And this is our outsourced CTO. It's called Advisor Stack. They're raising money to continue to develop. I've been an investor for almost a year, over a year, around a year. I can't remember exactly, but put my own dollars towards it. And again, a couple of us on the team have also invested money in it. It's fintech. With any fintech, I'm just going to go right to the punchline down here at the bottom. These are the folks that lead it. Met all three. They're raising $1 million on a $10 million valuation. That's that upper left slide. So, again, you got to be accredited. The min that they're looking for is 100,000. It has to be taxable money. But if you're sitting around, you have that type of money and you have more market exposure than you want, or you want to decrease your market exposure, and you like watching Shark Tank, this is the ding, 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 whatever the code is, or the music is. So $10 million valuation. So $1,000 or $100,000 gets you 1% equity. Again, non-voting shares. And why invest now? I will tell you so venture capital, it's unlike real estate, right? So real estate, I know the apartment thing is going to develop and it's going to make its money, and it's probably going to make it in the ballpark of that 15% IRR, right? Because it's real estate and there's a lot more knowns. You go off into venture capital, zero is one of the options of how much this is going to be worth. That's not the case in real estate, right? Because you can see it's physical asset. But whenever you fund something like this, they're going for broke, right? And they're building this out and they're doing fantastic so far. And I'm a believer, have my dollars behind it. But zero is on the option chart of, I could get nothing back. So you do have to understand that. Now, I believe, and I think what's going to happen is they're going to continue to grow until they get bought by one of the big firms out there. And when, they're saying their valuation's at 10 million. I don't think they would sell for less than 100 million. So you're looking at, 10x in your money sort of thing. You just don't know. But it is, again, it's accredited investor, 100K min. If there's something like that, trying to change the world with disruptive tech, I love that stuff. I'm a believer not only in the company, but also the folks running the company, which is important. So if you want to know more, let me know. They are currently raising money. All right, now I'm going to transition to Mike. And Mike, I'm going to tell the quick background story of, Mike started in January, and I said, hey, Mike, you have a lot to learn as far as, exactly how a financial firm, does what we do internally, right? And he's done a great job at that. So now that he's, hitting on all cylinders there, I want to expose you to some other things that we've done. So take a call from this guy, right? And I do have a client who's also a good friend that had another client, good friend, invest in a movie, right? Investing in a movie. What? Like, what are you talking about, invest in a movie? Hey, explain me all the details like that. So instead of me explaining to Mike, I had a new friend reach out to Mike and explain it to him. But yes, if you want to invest in a movie, Mike's going to let you know a little bit more. So Mike, over to you, and then let me know when you want your video to pop up.
Yeah, so I'm going to share my screen and start off with Band of Brothers. If you heard of that mini series, came out in 2001. I think it was only on HBO back then. I think it's expanded to Netflix. But, the story of Easy Company. And if you have a military background, you can appreciate the invasion of Normandy and the significance of that. So invest in a movie. What does that mean? Are you basically buying Tom Cruise's coffee cup for $10,000? That's probably what you would get if you were doing those. But there are options which I consider a kind of a fun investment. It's like, obviously, a primary goal of investing is to make a return on your dollars and increase your wealth. That's the key. But if you're going to have fun and say, hey, I'm part of making a movie, this is an opportunity. So what this is from Band of Brothers, and this is called The Jump, and from Currahee to Normandy. So they took the actors of Band of Brothers, and on the 80th D-Day anniversary earlier this year, they worked on training on doing a jump. Now, these are not military people. They're people playing military people. But if you watch the series, you might feel like you know them. You might, and I'd encourage you to watch the series. So they trained them, they worked on it, they made sure their physical abilities were up, and then they actually took them and they parachuted. And you'll see in the video, you'll see that the plane they were flying on was an old plane. It wasn't like these ones you see nowadays, and it was really to honor the D-Day. So invest. So what does that mean? So they captured all this footage, they captured it all, but there's a cost of turning this into a documentary. So the opportunity to purchase into that, the minimum is a $25,000, and that earns you or purchase you a 9% share. And the goal is over the next 9 months or so, put together that movie and produce it, and it will debut. They're expecting they're going to show it the debut in Normandy or in that area somehow. And maybe if you're one of the investors, you show up, you get to be like, part hanging out with the crew because you're part of creating this, art. Now, how do you make money on this? Where's the investing side? We could all just sink money to show up at movies, but but the goal is to actually take this, and after they do the debut at these different film festivals, then they turn around and sell it to a Netflix, an HBO, a Amazon Prime. They sell it. That money comes back, and they want to obviously return your investment as quick as possible. And then as that continues to play, and there's royalties that happen for years and years, you get a 9% share. So, if it generates 10,000 a year, you get a $900 check in the mail because you are one of the creators and producers kind of that movie. So exciting stuff. As I think about this, for me, investing in a movie, I would always have to resonate with the movie. Like it couldn't be a movie on, I don't even know. I'll make up some romance movie. I'd be like, I don't know. I won't put my money in that, but that'd probably make a ton of money. But if you have a military background, you've seen Band of Brothers, you're going to see on this video several of the actors that you probably will recognize. And, if this resonates with you, just reach out to me or Steve, and we'll get you in contact with the producer of the movie and figure out if investing is where you want to go. With that, I'm going to turn this back over to Steve. We're going to close this out. He's going to show the 3-minute sizzle reel, they call it, and to kind of get you excited. And that's all I've got. Steve, anything else on this one?
Yeah, you bet. I'm closing some screens here, but we've done 2 of these where we've had the producer and the not producer, but we've had the executive producer, I should say, and the fund. So you may have heard of the first one was a rom-com. It's called Plus One. So it's pretty cool. When I tell Irene, I'm like, hey, my wife, I don't tell her, I ask her, it's like, hey, you want to watch this rom-com movie with me? I think you're really going to like it. And no kidding, right before then I mentioned, these are the people involved in, bringing this film to life, and it's kind of like surreal, right? Because we're watching on Netflix. So that was very cool. And then the second one, we got to go to the premiere during South by Southwest, here in Austin, is one of the options for premiering movies. And that one was called The Hurricanes, and it was about the first female football team, which is out of Houston, first professional female football team. And, I went from not knowing there was such a thing, to be honest, just missed that story. It was in the 1970s, and to be in where I was actually sitting behind the ladies that were on the team that are now 70s and 80s and stuff. So watching a movie about themselves, yep, tears, just kind of thinking about it because it was so cool. And it has live videos and interviews and stuff like that. So it was a really cool thing to be part of. So if you want to be part of this, reach out to Mike and we'll let you know more on how to do it. And again, with anything else, these are things you want to do your due diligence on, think about before you get involved. But it's also gonna be kind of cool. So with that, thanks for listening. And here's our movie. Here's our sizzle reel.
Band of Brothers is real. There was no flinching in Band of Brothers. It had a docu-drama style to it that was just brilliant. It really puts you in the foxholes, in the trenches with the guys, really gets you among the men. That's why it's endured so well, I think. We were a group of actors, young, serious, historical document we're making here. Honor these men, honor their memories, honor what they did.
There are two men in my life who mean a lot to me, my father and Tony Garcia. People who do approach me here in Normandy, they don't approach me because I'm Douglas Spain. They approach me with Tony Garcia.
All of the Easy Company veterans are sadly now passed on, and we honour them by jumping into Normandy for the 80th anniversary of D-Day.
Make sure that this story doesn't get lost. Period. And, you know, when Alex came up and go, "You want to do this crazy thing?" Why not?
It's a once in a lifetime experience. It's not for us. We are in what we're doing here. We're a thread. We're a line. We're a story. But we're doing it so that it doesn't get forgotten. He won't die. He'll never die in my family.
Everything's ready to go. You're set. Load them on the plane. The engines.
It's just, you're there and there's 1,000 things going through your brain.
Seeing the view. When you jump out. I thought I was going to close my eyes and just, you know, feet knees together. That's all that was running in your mind.
But that night, you know, I can't imagine how horrific it was.
And then to be here, land it. I mean, it's the beautiful. They were shining down on us today. I can't believe what we just did. I can't believe it. I cannot believe we just did this.
These guys jumping out of the plane I think it's amazing. I think it's amazing. I think it's something they really wanted to do, and they've done it.
We did it, Tony. We did it!
All right. Good stuff. All right. Thanks, everybody. You have a good one, and we will see you guys tomorrow. Bye.